Welcome back, everyone. Thanks for joining me today. If this is your first time watching me or this channel, what you're going to find here for the most part are videos related to home financing, mortgages, home buying, saving money at home, anything like related to that, anything related to your home finances. And hopefully, I'm sure that there will be something here in this channel that will interest you. And this video in particular is about conditional approvals and what does that mean? What are conditional approvals? What are those conditions? I get that question asked every once in a while, so I thought I would do a quick video on it. And so essentially when you get an approval, when you get your initial approval, what that basically means is that the numbers work and everything fits within those general guidelines. However, the underwriter needs some additional documentation just to check a few boxes, and those are the conditions that that the underwriter is talking about. And when you hear that you're conditionally approved, I've got myself a little cheat sheet here under the camera so I don't forget any of these examples of the conditions that we're talking about. So, like I said, typically it's documentation, and one of the common one of the common conditions that you'll need is verification of employment, proof of employment, or VOE. You might see that written someplace if your lender provides you with a list of conditions that need to be satisfied. If you see VOE, that's verification of employment, and what that typically means is that someone at the lender's office is going to call your employer just to verify that yes, you're still employed. Another thing that could be required is a letter from you explaining any gaps in employment. So if you've got 1 or 2 months or longer where you were not employed, it's not sufficient that you just told your loan officer about it. The underwriter might want something in writing from you explaining the gap. That's just another example of a condition. A gift letter. So maybe you're using gift funds for all or part of the down payment, and whenever there's a gift being used for a down payment, the donor of the gift has to complete a gift letter, which is just a standard letter that states, I, Amanda, am gifting $10,000 to Eric for the purchase of this home, and the critical piece in that letter will state that there's no intent for this. It's understood that this is not a loan and it does not have to be repaid. So if you're getting a gift, there will always need a gift letter, and if the gift letter hadn't been provided already to the lender, that's one of the conditions that would need to be filled or completed before closing your loan. Another thing that could be required is additional bank statements or pay stubs. So maybe you started the process a couple of months ago or a month ago, and you provided your 2 most recent bank statements and your last month's pay stubs, and now a couple of weeks or a month has gone by, you've gotten your approval, and the underwriter might just need to see the most recent set of bank statements and pay stubs. So that's almost always one of the conditions that you'll see. Most recent tax return. So for example, I'm filming this, it's the spring, it's April 2020, and it's it's tax time. We do have a little bit of an extension for us right now, but it could be that the underwriter wants to see the most recent tax filing, because we're right around tax season. So not just your 2018 and 2017 tax returns, they might be asking to see now the 2019, especially if you're self-employed. That's often a common occurrence. Any debt to be settled on your credit report. So if for example you get approved only if you pay off this car loan, for example, because the car payment is throwing your DTI up too high, and in order to make the numbers work and for you to get approved, you needed to get rid of that car payment, and you told your loan officer, well, yeah, I've only got 2 or 3 payments left, I'll just pay that off. Well, they're going to want to see proof that that happened, and a documentation from the lender that holds your car note, indicating that yes, this debt's been satisfied, so it's no longer an obligation that's remaining on your loan application. An appraisal, so you could be approved pending the appraisal value coming in. So if you're purchasing a home for $200,000, or you're refinancing and you're claiming the home is worth $200,000 and you're bumping up to the maximum loan to value ratio, either way, the lender wants to make sure that the home is worth what you're claiming it's worth, or what you're buying it for. So if the appraisal hasn't been done, that's one of the things that needs to come in before you close, and they'll check that. Title work, and that's always a conditional thing there for before closing, and that's almost never done before you get your initial approval. So that's just a formality, and the title company, once that's all finished, then you can close. Divorce documents, if you've been divorced, and especially if you are the recipient of alimony and child support, and you're using that income on your loan application is to be able to get approved, you're going to have to now prove that the court has mandated that you receive those payments, and you need the documentation to support that. So that if you hadn't already provided that documentation to your loan officer and you were conditionally approved, I'm sure the underwriters including that documentation as one of the conditions before you close. Bankruptcy documents, so if you had a bankruptcy within the last few years, or if it's appearing on your credit report or prior foreclosure, you're going to likely need to supply the documentation showing what happened there. And then also, finally, any documentation related to an estate or trust. So maybe you're maybe refinancing a property that you inherited, for example. So you're going to need to provide that documentation. Or if the income you're claiming to use for qualification purposes on your loan application is coming from a trust fund, you're likely going to have to show documentation of that. So those are the most common examples. There are probably a few others. I'm sure there are. I mean, I've seen others too, but these are the most common types of conditions that you might be required to provide, or you might see required before you can close your loan. If you have any questions, definitely leave them in the comments below. I'll reply to you. I appreciate you watching. I'd even appreciate it more if you would subscribe to the channel and hit the bell notification icon to be warned when I'm going to threaten you with more videos. So thanks again for watching, and I'll see you next time.